it look like to buy a home and to be a first-time home buyer. And the process, y'all, is so much easier than you think, okay? It's not as crazy as you think. It's not as complicated as you think. We actually want to make it so easy, so clear. And so tonight we're just going to walk through a few of those steps.
Yes.
Next slide. Okay, this is our team at Graham Group. We do have the amazing Summer and Alan Graham here with us tonight. Summer and Alan started this business 15 years ago. So we are all building off of what they have started. So thank you both so much. They're our principal agents on the team. But the rest of us here, Erica's obviously right there. Most of you know Erica. I'm up there. Clarissa and Charlie are not here tonight, but the 6 of us are Graham Group team, and it's any of our honor to serve you at any time. The cool thing about having a team is at any given point in time, if you're working with any one of us, any of the other one of us can jump in. Actually, everybody on the team is licensed. So if anybody gets sick or anybody can't make it to a showing, or you want to see something at 7 p.m., and one of us can't make it, somebody else can come. So we got you. And we work with Compass. Compass is our brokerage. They're actually the largest brokerage in the U.S., have been for the past 3 or 4 years, and provide tons of amazing resources. It's just pretty incredible to be a part of. But we'll talk about some of those specific resources that will serve you well along the process as well. Okay, here is the steps to home ownership, and we're going to break each of these down. Super simple. We've broken it down into 9 steps, but we'll kind of go through these step by step. Honestly, it's a lot easier than you're thinking, so we'll kind of talk through each one of these. But let's start with step number 1, if we can go to that one, Erica. Step number 1 is find an agent. You need a real estate agent. You need someone that can take you into properties. You need the resources that we have for sure at Compass. So that's us, that's me, that's Erica, that's Summer, that's Alan. We would love to work with you. It would be our honor and joy to serve you. Honestly, the position and posture that our team takes with Graham Group is it's our honor to serve. So we want to serve you. We are here to make sure that what you're looking for is our priority. And that kind of takes us into number 2. So something that we do as a team that not everybody does, honestly, is an initial consultation. We call this a buyer consultation. So we will sit down with you. We have some strategic questions that we'll ask you to really figure out what you're looking for. So whenever you're ready, if you're like, I'm ready, I want to buy a house right now. So your first step would be this initial buyer consultation after you talk to one of us. And what we're going to do there is really find out what you're looking for and strategize together on how we're going to target your search towards really what you want. That time up front, y'all, really saves a ton of time on the back end. So what some agents might do is okay, cool, you're looking for a house, here's 40 houses. And none of them are what you're looking for. They just happen to be in your price range. So what we want to do is really target what you're looking for and then build your search based around the things you told us that are important to you. And we'll figure all of that out in the buyer consultation. We'll also kind of lay out, here's what you can expect from us. Here are the things that we're going to do for you. Here are the things that you should hold us to. Hold us accountable to these things. It's important to us. And then there's a few things that we'll ask from you, but it's really simple. It's just your trust and just for you to be transparent with us throughout the process and not leave and go to, I don't know, South Africa and not tell us when you're about to close. But really it's what you can expect from us to serve you well throughout the process. Okay, number 3, this is huge. You've got to get pre-approved. And we have our amazing lending partners here today with Origin Point. We have Thomas and we have Jessica here. So these are 2 people you should definitely talk to. Thomas will have a moment where he will present some information about this. But okay, really quick, let's talk about the quiz. Who made over a 50% on the quiz? Okay. Who made over a 70%? Okay, who made 80%? Oh, what was the highest? 70 what?
71.
Oh, do we have multiple 71s?
Yeah.
Congratulations. I don't have a giveaway. I wish I did. Yes. Well, a couple of the questions on the quiz was, when should you talk to a lender? Right away. They're gonna actually be a part of your guide in this process, and they'll help you determine when is gonna be the best time for you to jump into this house buying process. So you have a couple of them here tonight that you should definitely talk to. So if you're like, I don't even know where to start, that's a great place to start. Talk to a lender, start that conversation, get pre-approved, figure out what number is gonna work for you and your family to move forward. To give you a price range as to what you're looking for. There was another question here. Oh, how quickly does the pre-approval process take? It only takes 24 to 48 hours. It's super fast. And if you work with someone like Thomas Ross, he can do it in like 2 hours. But these guys are super efficient. They're super savvy. Origin Point is actually a partner with Compass. So the forward-thinking, technology-forward, progressive, like we care about doing things right, doing things well, that the value that we want to bring at Compass is going to be completely matched at Origin Point. So get pre-approved. If you're like, when do I do that? My answer would be tonight. Do that ASAP. And then we'll find properties. So this is something that's really cool with Compass, is we have something called a Compass collection. So I'm sure all of you are familiar with Zillow. We actually we don't like Zillow. But Compass has something that looks, I think, even better than Zillow. It's very similar, it will function the exact same way, but it's our way that we're gonna build out the things that you tell us are important to you as you're looking for a house. So we will send you a collection. It looks just like you can see it on your phone through an app, you can see it on your computer through the internet. It looks just like you would be searching for houses on Zillow, but it'll be specialized to the things you told us that are important to you. You can comment, you can like, you can put things in the trash on this collection. You can say, hey, this one I want to tour, and we can see all of those things on the back end. There's something new coming out too that's just launched with Compass that's super cool. We're doing some trainings on it to familiarize ourselves with it, but it's called Compass One, and it's actually going to be like a consumer portal where anything that we send you guys, whether it's a collection or whether it's like we have a meeting or like what are the next steps in the process here, it's all going to live on one webpage or one app where you can see like, oh my gosh, here's everything we've talked about, here's all the documents, here's the houses we want to tour, here's the houses that are in my collection. So we try to make things really easy and really technology forward at Compass, but the collection is kind of what we will work off of. After you've been pre-approved, after you've talked to one of us, we'll start looking for properties, and that's when it starts to get pretty fun to walk through some of the houses. You can switch here.
When it gets really fun is you find a home you love, and this is when you will draft up an offer.
Yep.
So the offer will have many different terms, such as the price that you're willing to pay for the property, how long your closing is, which that was another question. The closing period on average is about 25 to 30 days. I don't know if you got that right, but that's the answer. And so, yeah, it'll also include things like if we're waiving any contingencies, or if your offer is contingent on certain things. And then also too, something super amazing that Thomas and his team does is any home that you find and you're like, okay, this might be something I want to put an offer in on, we can send them the address and he'll be able to run numbers on it, and so you can have an accurate visual of what your mortgage payment would look like all in. And so there's hopefully no surprises after that, because the rate can fluctuate, but yeah, you can kind of have a really good picture moving forward before being locked in. So then, once we submit our offer over to the listing agent and they'll present it to the seller, we might go back and forth on negotiating a couple times, but once we have an offer that both parties have agreed upon, we will both sign, and this will be a legally binding document that will then be sent off to title, and they will open up an escrow account for our transaction. And then once we're under contract officially, we will get you set up with your home inspection. So it is actually our responsibility to coordinate this, make everything run smoothly in the back end. There's a lot of moving parts, but we got you covered with our team that the Grahams have been working on relationships with for 15 years. So we have some really great people that we work with. So we'll get your inspection scheduled, and then you'll have a timeline of your inspection period. After your inspection, your general inspection, you might decide that you want to get other technicians out there, like an HVAC specialist or a plumber or a roofer, and we can get different quotes here. And then we also have another opportunity to negotiate, whether that be repairs into our contract, or whether that be your credit, or we might get to bring the price down a little bit based on our findings. We'll negotiate back and forth with the seller from there. So then once we have moved forward and we're out of inspection period, we are officially pending. And this is where the lender will, you'll be getting a lot of signatures at this point from Thomas. So you want to make sure to stay on top of those. But once they have all your financial documents and everything they need, they will review them, issue a clear to close. And this means that your loan is complete and your file will then be sent off to title and they'll start getting their piece moving. But yeah, we'll also have an appraisal done at this point, and depending on how your appraisal comes in and if you have any contingencies in your offer, we might be able to negotiate the price down again based on if that appraisal came in lower. And then you'll make it to close. So the week of closing, probably a couple days before, sometimes the day of, we'll do a final walkthrough on the property. And this is really to make sure any repairs that were agreed upon were done and done correctly. And we just want to make sure it's in the same condition as we last saw it. So we will schedule our closing with title, and you will sign all the documents. There are a lot to sign. And you will receive your keys, and you're a homeowner at that point.
Thomas Ross.
Cool, guys. I'm going to talk a little bit about pre-approval, but I do want to say Graham Group, amazing realtors. We work with a lot of realtors as lenders. That's pretty much our job every single day. And when they say that they're here to serve you guys, it really is a really special group to work with because they are always putting their clients' needs first. The commission and the money they make from it is always an afterthought for them, which is a really nice thing to see because this industry is full of some people that want to make money, and their goal is definitely you guys first. So to introduce myself, my name is Thomas Ross. I'm a mortgage lender here in Dallas. I've been doing it for about 5 years now. My business partner in the room, Jessica Lynn, is here. She's been doing it for 14. And then if you do end up working with us, you'll end up talking to Caitlin on the phone as well. She's remote in Abilene, and she's our sales assistant, so she's going to help us through the pre-approval process too. Cool, so I'm going to go over pre-approval, but think of it really, really high level, okay? If you guys are in the home buying process, or you've even considered buying a home, more than likely your TikTok, your Instagram, your Facebook, whatever, is throwing all this stuff at you. Different mortgage lenders information, FHA this, VA that, conventional this. I'm not gonna go into super specific loan details unless you guys ask me for them for your situation. I'm just gonna talk about, hey, every single loan, we're gonna kind of look at these things, but the rules for different loans are going to change, okay? And every loan is unique to your circumstances. The same way that you want your house, you're going to get your loan from us. It's all very specially picked to fit your goals. Similar to them, we're going to have an initial consultation where we figure out what those goals are and where the numbers fit for you and your family, okay? And then we're going to kind of work backwards from there. But high level overview, we're going to look at your credit, your income, and your assets, and how those pertain to the loan guidelines. So first up is credit, and I feel like this is probably one of the questions that people got wrong a lot. What's the minimum credit score to buy a house? As far as the loans that we have at our origin point, the minimum is a 500, which is probably a lot lower than what most people expect, right? Now, that's not to say you shouldn't get a higher credit score. The higher it is, the better, right? You're gonna get better pricing, better loan options, but we do have options if you're lower, and there's nothing to be ashamed of. We often help clients work on their credit, so maybe you're not there yet, but over the course of 6 months, a year, 2 years, whatever it is, we have tools that we can use to help you get to the right place, okay? When we start the pre-approval process. It is all going to be done with a soft credit check, meaning there is no hit for starting the pre-approval process. That's why the answer is talk to a lender right away, because you're not impacting yourself negatively at all, okay? We do have to do a hard pull to close the loan eventually. That's when it impacts your score very, very slightly for mortgage pull, 3 to 5 points. But the pre-approval process, up until you go under contract, we're just going to work off a soft credit pull. Okay?
And can I just add, because most clients and most borrowers do not have an actual clue what their credit score is before they come to get a mortgage. And
Correct.
So the best thing you can do if you're considering buying is apply with us, apply with somebody, especially as a soft credit pull for a mortgage. Because until then, like what your banks tell you and everybody else tell you is not a mortgage score.
Yep.
And so the number of people that apply with us and they're like, I have a 700 and they have a 620. Like, and they have no idea. It may be because of a car that was for $20 they haven't paid, they forgot about, and it's been delinquent. And like, we have one of the most amazing credit analysts in the country that can literally help anybody get their credit, if it's possible, to where it needs to be and give us a time frame to do it. So the sooner you apply, the better it is, like, for just your whole experience.
Yeah, totally
Sorry.
agree. Yeah, the other things we're going to check on your credit isn't just the score, but also your credit history, your trade lines, have you paid on time, do you have any bankruptcies, and then also the debts themselves. Now this is a common misconception. Usually when I talk to people for the first time, they're like, oh, I owe 25 grand in my car, and I've got 4 grand on credit cards, and I've got 20K in student loans. That's great. I'm gonna be honest with you, I don't care what the balances are. All we care about for mortgages is your minimum monthly obligations, okay? If your car note minimum is $450, even if you pay $500 every month because you want to pay it off early, I'm only counting $450 against you, okay? You don't have to memorize all of those. The credit report's gonna tell us what the minimums are, but that's just a common misconception. Awesome, moving on, income. Income is the other piece to those debts. How do we know that we can afford the house, right? Every loan is going to have different guidelines on what income we can use, but overall, we're always using your gross monthly income. In other words, your income before your taxes and your deductions. So if your salary says $60K a year on your offer letter, we're going to use $5K a month, even if you have 401K and healthcare and et cetera, coming out of it, okay? If you are W-2, salary, or full-time hourly, we can use your base income right away. Another common thing that you'll see on social media is you have to be at your job for 2 years. That is a myth. It is not true. I can close a loan with an offer letter for a new job that you haven't started yet, as long as it's W-2, full-time salary, or base salary, okay? That being said, if you've got any variable income, right, commission, overtime, bonus, we do need some job history there. Some proof that you've been making it for time, and then we're going to average that income. Every loan has slightly different guidelines here, but a good rule of thumb is 2 years. There are some instances where we can use 1 year of that variable income to help. Okay? And if anyone is self-employed in the room, apart from the realtors, you do have to have 2 years of self-employment in order to use that for a mortgage. Okay? A hard part about self-employed borrowers, and another reason to talk to us as soon as possible if you are self-employed, is we work off your tax returns. And your CPA's job on your tax returns is to get you to pay as little as possible to Uncle Sam. And I totally agree with that. Except we can only use your net profit from your tax returns when you're qualifying for a mortgage. And so your CPA's job is to get that number down, and I need that number up to qualify you. Okay? So again, talk to us as early as possible if you are self-employed. And then finally, the last piece, do you have the money to close on the house? Your assets, okay? We always have to source these funds. In other words, we need to know where they're coming from. That'll be part of our consultation. You can't use cash for a mortgage, like physical dollar bills. And I have had that before. Oh yeah, I've got 10K in the closet. Don't do that. Don't do that. But yeah, there are ways to still use that kind of little sneakily, but ideally you have it in a bank account. As far as your minimum down payment, again, it's going to depend on the loan you qualify for. Most people in this room, if I'm going to make an assumption, are going to need 3 to 3.5% of the home's purchase price as their minimum. Less than what you might expect. A lot of people think 10, 20% is required. That's probably the case when your parents were buying a home. Nowadays, it's a lot less, which is nice. There are some instances where you can do even less than that at 0% down, okay? On top of that, we have closing costs, okay? Some of that is fees to the title company. Some of that is fees to my company. Some of that is to pay for that appraisal that values the house. Some of it's your home insurance for the first year. On average, about 2 to 3% of the home's purchase price. Not steadfast, it's gonna be different for every house. However, this is a part that we can ask the sellers to help pay for, okay? Your down payment does have to come from you or a family member, but the closing costs can be paid for by the seller. It's all part of those negotiations. So when Erica said earlier, let's say something comes back as a repair, you're like, oh, I can kind of live without it, but if we can get some money, let's do it. This is where that credit comes in. Instead, you say, hey, sellers, can you pay for some of my closing costs in lieu of making that repair, okay? Gifts, super common for first-time home buyers, nothing to be ashamed of. Some people are like, no, I don't want mommy and daddy's money. Take it, please. If they saved it for you, use it. Yeah, you can totally do that. The one thing that I'll warn you guys about is don't take the money yet. Okay, so let's say mom and dad are giving you $20K. Don't have them transfer it to your bank account when you think, oh, I'm ready to buy a home. Okay, it does have to be documented in a specific manner in order for us to use it for a mortgage. And it's a lot easier if they actually keep the money in their bank account and then send it to the title company when we're ready to close. And that way, all we need to do is get a gift letter signed by you and your parents or whoever it is gifting you. Finally, this is just a recommendation, not required by any means, but if you're looking to buy within the next 1 to 3 years, I highly recommend keep your money in a high yield savings account. Okay, it's going to give you a return on the money, but it's not going to be volatile like it would be in the stock market, or useless like it would be in your closet. Right? Awesome. So those are the 3 pieces. Every single loan, we're going to at least look at those. Here's just some quick facts about mortgages. If you put less than 20% down, you have to have what's called escrows. This is where we pay your property taxes and your home insurance included in your mortgage payment. Now, even if you put 20% down, most people still choose to have this because it's just easier. Like, why would you guys keep up with that when we can just keep up with it for you instead, and you get used to a monthly payment, right? You can elect to waive them at 20%, but don't recommend. If interest rates go down, you can refinance, right? So interest rates are probably a big buzz term for you guys. If you're seeing it on social, that's what you're talking about. They're high. That's all relative. But let's say they tanked like the month after you closed, right? Oh, that sucks. Well, home prices are going to go up if they tank, and you just got a deal for the house. And then once you've made 6 on-time payments, we'll just get a new loan in place instead. Okay? You guys can come back to us for doing that refinance, and your payment gets to drop. So it's not as big a deal as you might think. And then finally, I love throwing this in there: average homeowner net worth versus average renter net worth in the United States. $396,000 versus about $10,000. Because real estate is the best way to build wealth in the United States of America, especially in a market like DFW. And here's some no-nos. My best ever performing social media post was me just talking through these with the worst lighting setup and the worst background, and people were just interested in what they shouldn't do when they're buying a home. So, financial decisions. Don't apply for new credit, okay? Once we've got you pre-approved, and these all have the caveat of at least come to me first, because sometimes we can work through it, sometimes not. But try not to open any new credit. Don't go buy a car. Don't go finance furniture. We do monitor your credit throughout the transaction, and any new lines that get opened, we see that immediately. Okay? Avoid large purchases. Don't spend your down payment, in other words, before you close on the home. It has happened. It is frustrating. I know it's nice to have all that money in your bank account, but don't spend it just yet. You're going to get a house instead. And then don't make any large deposits other than your normal payroll without coming to me first, because again, they have to be sourced. Employment. Don't change jobs unless we've spoken about it. Don't become self-employed, because we're going to have a waiting period to be able to get you qualified again. And then avoid taking leave from work. There are some ways around this, especially ladies, if you go on maternity leave. There's some mortgage guidelines around that, depending on the loan you're using. Just make sure you talk to us first to where we can still use your income and make sure you're going back to work.
Even if you're pregnant and you're not even thinking about it, or if you're thinking about getting pregnant, just go ahead and just mention that. I know you don't know as well, but like, just trust us on that one.
Yeah, it just has to be, again, you're going to hear the word document a lot, and it's because we're going to ask you for a lot of documents. Avoid closing credit accounts. This sometimes you might think that, oh, I just paid off my car, I just paid off my credit card, or whatever it is, I closed it, it's gonna help my credit score. Not always the case. Part of your component of credit is your credit history. In other words, how long your accounts have been opened. And if you close an account that you've had for a while, it can actually drop your score pretty significantly. That's why like when you pay off your student loans, you're like, dang, my score just went down 30 points, they hate me. Well, no, it's just that your account closed and your account history got lower. And then finally, don't ignore lender requirements. We're only gonna ask you guys for the minimum amount of documentation needed, okay? It's gonna feel like a lot sometimes, but the way I like to phrase it to my clients is, what if you were gonna lend someone $300,000, $400,000, $500,000 to buy a house? Would you wanna see those documents too? And the answer is always yes. If that was my money, I would wanna see those documents. So we're only asking for the minimum. We're not picking on you. We're just trying to help you get to the house. Okay? Awesome. And then we'll open up for questions. Tyler, Erica, you guys want to come back up?
Yeah.
Cool. Of course. So any questions, totally open, specific to your situation, general. We don't bite, so.
Now's the time. There's no dumb question.
I have questions about the average inspection timeline.
Yeah.
Just kind of what that looks like, just like briefly.
It's
I've heard some horror stories, that's all.
yeah. So like how long it takes to get reports back, or like how long the process
and then
takes?
like how long like a seller would repair it, things like that.
Okay. Yeah.
How much time that would typically add.
Yeah. Go for it.
Sure. Okay, so like I just had an inspection today and we already got the report back.
Okay.
So generally inspection, like it started at 9, our review was at 1:30. So that's like a average, I would say. After the inspection's over, we meet the inspector at the house and they'll sit down and go through the entire inspection, all the photos, all the findings, record it, so that they have that to reference. And then it really depends like what inspector you're using.
Yeah.
But that's how our preferred inspector does it. And then, for example, our inspection period is 5 days, which that's a little quicker. Usually we go at 7. So now my client can sit on that. We can review it again together, and she can decide: do we want an HVAC technician to go out this week? Do we want to get a termite inspection? Do we want what else do we want to do in this time frame? And then we'll send over an addendum to the seller to say, hey, we want this, and this done. And they might say, sure, okay, send it back to us signed. Or they might say, okay, we're willing to come halfway. Or we want to send out our own roofer and get an assessment ourselves. Kind of go back and forth. So as long as your agent is on it, communicating, responsive, and that they're able to kind of communicate back and forth properly, and you have a great inspector and great additional vendors like your roofers and all that, you should be good. But yeah, I mean things can happen if they're not being monitored properly.
Just to speak to that too, though, like our job as your agent, a good agent would make sure that we're the quarterback of that process for you. So like, we're only going to recommend, it's going to be up to you at the end of the day, we're only going to recommend people that have the same level of standard of care and service that we would value. And so like our inspectors are top notch. Like you schedule them one night, they'll be there the next morning, they'll get it done by the afternoon, we'll have everything we need in our hands ASAP. And then it's our job to make sure that you miss no deadlines, you know? So like, if you are like, oh my gosh, we missed a deadline, well, you didn't work with the right agent because they didn't do their job. So that would be on us, and like that's the benefit of working with a great team, that we'll make sure you don't miss any of those deadlines. But yeah, so anybody that we would work with, so like Origin Point, Thomas and Jessica, they're gonna all be top notch. It's gonna be that compass level of like, we wanna make sure you get the very best service. It's up to you at the end of the day who you wanna work with, but anybody we'd recommend is gonna be top notch for sure.
And I'll just add, I don't know if this has been said or not, but the whole reason you have that inspection period, what we call the option period, is that during that time, you can back out of that contract for any reason. You don't have to give a reason.
No reason.
So if for some reason that inspection report for you specifically does not work, you no longer want to move forward with that house, regardless if they want to repair it or not, you can back out and just move on to the next house. You'd be out your option fee, but usually
Couple
100
$100.
bucks,
Yeah.
200 bucks,
Mhm.
and then the inspection fee itself, 500,
Yeah, 4 to 6.
4 to 600, right? In the grand scheme of things, that could save you a lot of money in the long run of the headaches the house would cause, right? So you always have that option to just leave the contract. Yeah.
Or if you just wake up and have cold feet and like, I
Yeah.
don't want this.
That happens too. Yeah.
Just make sure it's in the app.
You reminded me, Thomas, there's 2 fees that we should mention for sure that you'll need whenever you're signing a contract on a house. You need an option fee and you need earnest money. So it's 2 things that you're gonna need to bring to the title company. Title, we said that a lot. It's like a third party that sits in the middle. They're actually run by lawyers so that nobody has any bias. It's like we're not putting any of our bias in and the seller's not putting any of their bias in. They're just holding your money so that it's protected. But you'll need an option fee, which we get to choose together. It's usually a couple of $100s, maybe 100, 200, 500 if we want to make the deal look really sweet. And then earnest money, which we get to choose as well. It's typically 1% of the price of the home. So at the end of the day, it's somewhere between $3,000 to $7,500-ish is what you'll need initially. But your earnest money goes towards your down payment. So your down payment at the end, whenever you're bringing closing costs to title, is less the earnest money. So
Yeah, option.
and
So
option.
it's option.
And option,
And
yes.
option.
And so, and then if you do back out of the deal within your option period, you can get your earnest money back in full. You just can't get the option fee back, but the option fee is the smaller, much smaller of the 2, for sure.
Any other-
I have a question. If you're self-employed and not a realtor,
Yeah.
what other options, like, are there other ways I get a loan if I don't have 2 years?
It feels like a
W2?
loaded question for my business partner. If you're self-employed and maybe the tax return doesn't work because your CPA is that good at their job, there are other options, what we call bank statement loans, profit and loss loans, 1099 loans. If you know that term, you get paid with a 1099. It might work for you. Yeah. Good question,
Great
Jess.
question.
Great question.
How did you possibly think of that?
I don't know.
We're working on it.
Awesome. Anyone else? No? Okay, you guys are experts.
I had a question that we could toss out, Thomas. Like,
Sure.
can you explain? You were mentioning interest rates,
Yeah.
but you've talked a little bit about like arms or maybe buy downs, like just high level on
Right.
some of those like strategies that we can use.
Sure. So interest rates, let's talk about them. They fluctuate the same way that if you and I were to buy a stock on a different day, like let's say you and I bought Apple, right? And I bought it today and you buy it tomorrow. Those are gonna be 2 different prices. The same way on a loan, if I start my loan today versus you start your loan tomorrow, interest rates are gonna be very, very slightly different. Constant fluctuating market, okay? In general, where are they right now? Somewhere between 6.5% and 7.5% is average, okay? Are there ways to get lower interest rates? Yes, there are. Better credit score is your best route to the better interest rate, okay? So work on that first. But there are some strategies we can use during the transaction to get that rate and then subsequently your payment lower, okay? So the easiest way is to ask the seller for some money back. You can ask for what's called seller credits or seller concessions, where they give you some of their proceeds from the house towards your closing costs. And we're gonna take some of those proceeds and pay an extra closing cost to get a lower interest rate. Okay, it's called buying points. A buy down is another term that you might see online. Okay. The other ways we can explore ARMs, adjustable rate mortgages. They start with a lower interest rate to start with. Okay. They're still fixed for usually 7 to 10 years. Most of the time you're going to sell a house before 10 years anyway. But yeah, it is an option. There are other strategies that we have to lower your payment, lower your interest rate. And again, that's something we go through on the initial consultation is how do we accomplish your goals for the house that you want. Good question. Clyde.
So refinancing.
Yeah.
So of course, like the interest rates right now are a little bit high. People are like, okay, hold on, I don't want to do that. But they find their dream home, so they're okay. We want to go ahead and buy it, but they are hoping that the interest rates are going to go down later. So
You and me both.
right, exactly. So what are the pros and cons to hoping to refinance / also like whenever you get there, like what are the cons of that?
Sure. I love the first part of your question, right? Hoping to refinance. You shouldn't buy a home if you're planning on needing to refinance for that home to be affordable. That's not the right home for you at that time, okay? We always want to make sure you're comfortable with your initial payment because there is no guarantee that rates will go down. I can't predict the market because I'm not Nostradamus, right? I would love if they went down, but I don't know if they're going to, okay? So that's first and foremost. We're always going to make sure you're comfortable with your initial payment. However, should the opportunity arise that rates do go down, don't worry, I track all of that on the backside for my clients, and I will be giving you a call, okay? Then we can do what's called refinancing, okay? Refinancing just means we're getting a new loan. We're gonna pay off the current loan that you have and put a new one in place on your home with a lower interest rate and therefore a lower payment, okay? There are still closing costs for refinances. They're lower than what you pay for a purchase of the home, and we can roll them into the loan at that point. So in an ideal refinance situation, you are coming to the table with $0 out of pocket, you are getting a lower monthly payment, and you actually get to skip 2 payments when you finish the refinance. So it's a pretty sweet deal if it works out, and you don't have to track it, because I'm going to call you when it does. Yes, ma'am.
Okay, as far as like renting versus buying, what point would you recommend renting as far as like how long you plan to stay in a place?
Yeah, so I have a simulator that I can do for specific situations of like where you're renting now versus where you'd expect to buy, because obviously that plays into it. On average in DFW, because we have such a strong market appreciation here, somewhere between 2.5 and 3.5 years, if you're going to be in the same place, you'll come out ahead buying as opposed to renting. Yeah. So, and that comes with job and family stability, right? It's kind of the bigger picture there. Good question. Anyone else? No? All good? Thank you guys for coming. We really appreciate you.
Yes.
So one thing that we're super passionate about, and one reason why we got into the business, I did not have representation for my first home, did not get anybody to walk me through the process, and ended up in a poor situation because I didn't have representation. I was young, I didn't know. So one of the big pillars of our business is to get y'all on a sound financial footing, especially if you're a first-time home buyer. We want this to work. We're big believers in creating value and having excellence with our clients. So if your plumbing breaks at 2 o'clock in the morning, we want to be your first call. If your HVAC goes up, we want to be your first call, because we're not just a transactional process and agent for you. We are in like the lifespan of what you're going to be doing when it comes to real estate.
Yeah.
So if you have anything when it comes to, even if you're not in the finance, it's like, hey, do you have XYZ? I've got a guy for everything. Summer has somebody for everything. So that's something that we really, it just doesn't start and stop with real estate.
Yeah.
It's a relationship that's going to continue on. And another thing, a big benefit, and I wanted to show this earlier, but I didn't. A big benefit of being at Compass is our tech is absolutely crushing it. It's the best of the best of the best when it comes to the real estate world. You're getting direct information from the MLS, so you're getting accurate information. First, how many of y'all raise your hand? You look at Zillow, Redfin. Okay, that information is not accurate, and it's one of those things that being part of Compass, we have access to insider information, and it's the largest brokerage. So we actually have tons of listings that aren't even public to Zillow, Redfin, Realtor, all of those. So it's a huge benefit that we have, and the tech is super savvy. So, and so that's all I wanted to chime in with. But thank you guys so much, Tyler, Erica, y'all did amazing. You were okay.
I'm working on it. Yeah.
Go for it.
I just have a quick question. For sure. Townhouse versus a house. What are the pros and cons?
Throw in
One
a
better
condo
than
in
the
this
other?
conversation.
This, I'm like, I get fired up. I bought it.
Interest rate.
This is all you.
Interest rate and, I mean, HOA. I mean, it really depends what you're looking for. Like, it might be good enough to where you're like, I want a townhome. I want a condo.
I don't think
That's like my
townhome
goal.
counts. You do have to throw condo
Or
in there.
condo, yes. But like townhomes, they might look like a townhome, but it's still a condo. I mean, I would say the biggest hurdle is if you're going to be FHA,
Yeah.
getting approval, and then also the interest rate might go up a little bit. But if this guy can make the numbers work pretty good, so where you like your payment?
Yeah, I'll chime in here. So 3 different types. Single family is what everyone considers a normal home, right? The difference between townhomes and condos. Both of them have homeowners associations that generally have some insurance coverage. You share walls with your neighbors, right? So there's kind of an implicit togetherness there that you have to pitch in, right? So that's why you have large HOA dues on those. The legal difference between a townhome and a condo is in a townhome you own the dirt. So you actually own the property underneath the building. That's very valuable in Dallas-Fort Worth. On the other hand, in a condo, maybe a lower purchase price, so it could make your numbers work better, but then you only own the interior of your unit. You don't have rights to the land underneath, right? Interest rates are slightly higher on condos as opposed to townhomes and single families. Those are going to be the same as each other. Condos are slightly higher. Slightly riskier is essentially the why. And then again, one of the loan types is tougher to use on condos. So townhomes are an easier avenue if you're in that particular one. Go ahead. Yeah. What's up?
I've seen where like your property value can go up, which increases your monthly pay and like the other pays.
Taxes.
Taxes.
Yeah. So your mortgage payment is fixed. It's not going to change. Your home insurance can fluctuate and your property taxes can fluctuate, right? Your property taxes in Texas, we have what's called the homestead law, okay? So you add what's called a homestead exemption onto your property. That means I'm gonna live here. It's my homestead. When you have a homestead, no matter how much the market goes up, at most they can raise you 10% per year in value, but you also get some deductions on your property taxes with that homestead. So with that, it usually keeps it in check, okay? That being said, every year, your escrow, the homeowner's insurance and property taxes, goes through a recalculation with your mortgage servicer. And if there is a change, whether it went down or up, you'll get notified early in the year. Yeah. Good question.
Anything else?
Cool. Thank you for coming, guys. We have a gift for everyone. So we want you to take one of these, take a little cheat sheet home with you, and then if you did not sign in, please sign in on your way out. But thank you so much for coming, guys. We're here to be a resource if you guys.
Thanks, guys.
You guys ready?